Good evening, guys. Ken at Tortoise Capital Strategy Podcast for Sunday night, June 21st. So the Patreon site is updated with that rolling list of June nightly podcasts. So it's all kind of in one space. And those of you in the hybrid course with access to the learning management system have, I've updated the course number 104 with all of the nightly podcasts as well, and then I reorganized the two hybrid workshop days, and then the two podcast Q&A sessions, all at the bottom of the lesson stack. I'm probably going to put those also into a separate course number 109 that is just going to be the 14 hours that we did over the weekends, and then the rolling weekly FAQs. That way there's a bit of a separation between the strategy podcasts, which stand on their own now, and the collection that was the hybrid workshop. So once I'm satisfied that I have that course number 109 squared away, and I'll get everybody also enrolled in there. I enrolled many of you in there now, but I didn't have a comprehensive list. So that's a work in progress. So I wanted to make a clarification about the supported spring crossing kata versus the systems definition that I'm working on with Eugene and David. So there has been a continuing interesting discussion about the trailing stop in the supported spring crossing, and when do you go to no lose plus dinner for two? And that's an important question. That's really what are the instructions that you want to give your firemen? So I just want to kind of sketch that out right now. So we've got that RL10 in the harsh winter, and it has rolled over. And so again, we draw that line across the bottom of that, and that's going to be a CD collapsing dragon short if that price level here ever gets violated. So that's important. And we had the baby dragon is tracking that harsh winter all the way down, and then he's going to roll over pretty quick. And so that little RL10 crossing the baby dragon, which is again the SMA3 of the RL10, that when you have that strong directional move, mathematically that line's going to straighten out, and so will the baby dragon. And when that changes down here, you get that crossover. That's the alert that winter is about ready to become spring. And mouse here. And that big fat dragon that was moving along here, he's going to roll up. That's that 10 period Bollinger Band plus or minus a half. So that little baby dragon lets us know that winter is about to become spring, and it just did. That it's going to cross the dragon here shortly, and it just did. And that that PSAR, which was tracking all the way down, is also about to switch. And so when that switches, when this thing starts working, that PSAR is going to track all the way up. So we have right here that RLXD. So The baby dragon crossover tells us that winter is about ready to become spring, that the RL10 is about ready to cross through the dragon, and it tells us that the PSAR is about to flip. When that happens, you have your sight picture. That whole thing right there is your sight picture. And number one, you had a harsh winter. Number two, you had the RLXD. You had the PSAR flip. All of those things are true. So now you can buy. So now you're buying that moment. And your initial risk is down here. That is your risk. That's your execution risk to the PSAR flip. Now, this is the difference between a kata and a system. And also the difference between that and a strategy. Okay, so the purpose of the kata is simply to clarify precise rules to check on correct form. Can you follow the rules without any deviation whatsoever? So in the kata, what I wrote was just trail with the PSAR. There will come a moment when that gets above your entry, and then I say keep following the kata, or keep following the PSAR until it links up with the Bollinger Band mean of the river, because the river's Bollinger Band mean was coming down here for a while, and then it rolls up, and in my world, that's that dotted line. So when that PSAR gets to the Bollinger Band mean, then what I tell you in the kata is start following the Bollinger Band mean instead of the PSAR. That gives you a little more wiggle room up in here, right? Because you have relaxed, because you have locked in the gains. Now, the purpose of the kata is to see, can you follow the rules precisely, and can you make the chart markups, and then it asks you to do some other things like put the different colored dots in there, conduct an after action review, put the learning markups, post the chart, conduct the owl meditation, all of those things that teach certain elemental skills. So the kata is about the form and relaxing your mind so that you separate out the performance from the rules, because the kata is connected to rules, certainly. The kata is connected to rules, but the purpose is to check compliance with the rules. The purpose of a system is to make money. The purpose of a strategy is to make money. So when we go from kata to actually trading the system with skin in the game, there's an important choice that we can make in there. We can say, leave the initial risk in place until you see the PSAR get above your entry, then and only then jump this up and lock it in. That's one legit technique. I like that technique because it requires you to develop the skill of patience, and then asks you to strike at a key moment when that condition has occurred, and then you're locking in these gains. You've locked in those gains. No lose plus dinner for two. So I think it's worthwhile when you're learning to trade the system to actually exercise that, because it works out quite a bit. What it does is that in these early stages in here, when price might roll over and come down and hit the PSAR, but not hit your stop. And in fact, it might come down here and then take off, and it would be a nice trade. So the idea of keeping your stop in place all the way through and then jumping it up to no lose plus dinner for two has some tactical merit. There's also some tactical merit in saying, let me just follow the PSAR, and if it hits my stop, it hits my stop. And then if it takes out, if it comes down and then takes out my previous hedge, I'll just re-enter again right here, because all of the sight picture is still valid and it never violated my original stop. So that is still a valid entry. That's fine. So there are two legitimate, course of action 1 and course of action 2. Course of action 1 is to have a static stop and then strike move to no lose plus dinner for 2. Course of action 2 is just leave it with the PSAR until you get to the Bollinger Band mean, then make a decision to follow the Bollinger Band mean, follow the southern skin of the dragon, follow the PSAR, and then if it gets to 0.6, invoke the sniper. So there's about 4 or 5 different chained decisions that you can make in there. Now, what I just gave you there is a strategy that says for this standard entry and that sight picture, any one of those 5 different exit strategies that I just described can be very good, and a combination of them might be very good. And you might have all sorts of ecosystem variables to consider to help you decide which one to follow on one particular trade. Do you feel how complex that is as a strategy? It puts a lot of extra cognitive load on your decision making. It puts a lot of extra load on your monitoring all of these other variables. It's a legitimate position to take, to say, instead of the cognitive cost of implementing a strategy, I'm willing to take a simplified approach and just pick a good enough system that picks one of those exits and can execute it mechanically. That's a legitimate point of view to take. So if I were to array that on a scale of 1 to 5 in terms of complexity, over here I would say the kata is at a complexity of 0, because there's no discretion. All we're doing is checking compliance with a set of rules. Now, the rules happen to be pretty good, and you might even be able to trade them. But the point of the kata is simply to get compliance and to train discipline and perspective and some task proficiency without the ego getting in the way of saying, oh, I'm going to be judged by the quality of my rules and my results. No, you're going to be judged on your ability to perform the kata to a precise standard. That's all. If I were to pick just one of those strategies for exit and said, I'm going to just live and die with course of action 1, which says I will leave it in place until the PSAR has moved two dots above my entry, and then I will jump my stop to the PSAR, or to that moment, and I will stay with the PSAR until it hits the Bollinger Band mean, and then follow the Bollinger Band mean, period. You could actually turn that into kata 2, because I have eliminated all discretion from that. So in terms of complexity, a single committed robotic exit strategy has a complexity of 1. It's not 0 because you actually have skin in the game. So it's the live trading is always a little more complex. But what I just did there was I took some of the flexibility at a certain cost of having all those different exit strategies, and I elected to move to this end and said, I'm going to live with a good enough system exit that I'm satisfied with. It's now legitimate to say, if I do that, of the 5 different exits that I just described, well, hey, Ken, which one of those is best? Well, since there's no one standard set of criteria to judge what you mean by best, what you mean by best is what you mean by best. I said that deliberately. What you mean by best is what you mean by best. And so you could understand those 5 and say, in the trade-off decisions that I'm going to make to decide which one is best, I can use those criteria and look at the array and say, you know what, this one right here is the one that best achieves the trade-off decision that I'm looking for in terms of giving it room to run, but reliably preserving it against different kinds of moves. The challenge of that one is when you realize how many different kinds of price movements there can be out of the moment of entry. This thing might be a slow grind. It might leave quick, pull back deep, and then take off and go. It might do some kind of shooting star and then go. So there's an infinite number of ways to draw those curves. And so to come up with one exit strategy that satisfies you in all of the different paths that price may take is a real search. And if the criteria that you use to judge what's the best trade-off is different than the next guy's, you can quickly see that a trade-off decision for simplicity for a single exit strategy for one person, the more detailed it is, probably the less useful it will be to others who might have different baselines. So I think any one of those exit strategies I just described are pretty good, get you to the 80% solution. And you might even say, you know what, I'm willing to have one that works 80% of the time, and the only thing I'm going to do is use that idea of the sniper and the manager and say, look, up until this thing is 0.6 in hand, I'm just gonna follow the PSAR, or I'm gonna follow the PSAR to the Bollinger Band mean, and then pick up the Bollinger Band mean. But if it ever gets above, 0.6, sorry. So if it ever gets above 0.6, then I will activate phase 2 of my exceptional exit strategy. And then I'm going to take half with the sniper and half with the manager. But since half the time it doesn't even get that far, then the simple management strategy of following the PSAR will be good enough for me. So you could find a number of different places to be on this array of complexity, from pure strategy, where I'm going to decide which one of those 5 based on the needs of the moment, all the way down to simplicity itself, where I'm going to pick the one I love the best, and I'm going to study it for 30, and I'm going to stay with it, and then I'm going to keep back testing these other ones, and then if any one of them ends up having a statistically significant improvement over the one I chose, then I'll change my strategy. So there's a lot of different positions that you can be in there. I will tell you that the more complexity that you put into choosing from among these exit strategies, the less span of control that you will have when it comes to monitoring a bunch of other positions. So one of the reasons that I limit myself to those 4 bullets and a span of control of 4 is that I want to be able to execute a not unsimple not the simplest exit strategy, but complex enough that when it's time to use the sniper, I'll take the sniper. So for me, I'm trying to find some middle ground in here where it sounds an awful lot like this. Unless unless the PSAR is very, very close to my entry, like exceptionally close, I'm just going to use the PSAR. But if it was remarkably close, and what I mean by remarkably close is based on my experience with that symbol over the last 100 trades. That's what I mean. If it feels remarkably close to me or abnormally close, I will then just keep the PSAR, the original PSAR, and then jump it to no lose plus dinner for 2. Pick up the PSAR to the Bollinger Band mean, and then use the Bollinger Band mean with half the position, unless I feel like the sniper, and then I take it all with the sniper. Something like that. Just use the Bollinger Band mean until I should say it this way. Use the PSAR to the Bollinger Band mean, then the Bollinger Band mean, with the possibility of a sniper. And especially if I see it get past Z2. So that causes, now I can manage that one on 4 simultaneous charts, on 1-minute charts, because all I'm looking at are those 4, and that's only if I've got one position in each of 4 different targets. But what I really want to do is have 4 potential targets lined up, get a couple positions in them, and I'm trying to get 2 positions in 2 of them, and then I'm only watching 2 charts. And then if one of them really gets good, I want to get 4 positions and exclude the other one. So I'm only even watching 1 chart anyway. So I'm not even trying to look for other opportunities. If I can hook into a whale, that's where the possibility of getting 20 or 30 R on a given day comes from, is the find the mover and get large with risk control. Yeah, John or Van Miller says, hey, if we wait 10 bars to avoid the inevitable long wick before going to the PSAR, does that violate the kata? Yes, it does. Because the kata simply says, follow these rules 5 days in a row to demonstrate that you can lock that in, and so that you can experience the discomfort of saying, I actually think I have a better rule than the kata says, but I'm still going to follow the rule of the kata in order to achieve the positive effect of the kata. So don't confuse the kata with the system that you intend to trade. One of the things that the kata will reveal to you are precisely those areas where your trader's brain says, for 5 days in a row, I've been watching this symbol, and I've traded it according to those strict rules, and I've got a total of 50 trades in 5 days, and it seems to me that if I could trade, now that I'm relaxed and I have the discipline to be able to separate my decision making from one data point, it looks to me that over the course of 50 trades, if I adopted a rule of keep the initial position in place for 10 bars, then move it to the PSAR automatically, then I actually have evidence that that's a better rule for a system than what the kata suggests. Now, let's suppose that 10 of you did that over a 2-week period. What I would know from that is that, for a 10-day period, that rule was better than the kata's rules, and that's all I know. But all I'm trying to get with the kata is to put you into the mindset which allows you to separate the rule set and the ego of it, and trying to accommodate every single chimpanzee idea that comes from when you're trying to execute a simple rule set. Can you detect where the chimpanzee is entering your brain? And what was the basis of the chimpanzee's insight? And what do we do when the chimp offers us some insights? It's always going to be something that was triggered by an environmental concern. We just don't know if it's robust and systematic and statistically sound yet. I want to be able to receive those moments of insight and do something structured and systematic with it, but without disrupting the kata rules that I have committed to. Once you can commit to doing the kata and then simply noticing the opportunities for improvement, over the course of 5 days, you're going to find a half a dozen ways to improve that particular kata rule set in order to trade a particular system that fits you. So when we do kata in the dojo, we're just trying to show how to throw that particular punch with absolute mechanical precision. We will then work with that student to adapt the way they fight to the way their body is and their flexibility and their skills and their age and their fitness and whatever. And that becomes their system. The kata has a different purpose, and that's the point that I'm trying to make with this. So I don't disagree with your ideas on that, Van. I think it's a very good idea. It's one of the ways that you can reconcile that half the time following it with the PSAR would have been marvelously easy, all the way up to a 2R win. And half the time you'll get that long wick in the first 10 bars and it'll come down and hit the PSAR, but not hit the original exit, and then it'll just happily go all the way back up, in which case you'd have to have a rule for reentry. That's already more complex than I want the kata to be. So when you're ready to start writing your own system rules after you have completed the kata successfully. Now, as you're completing the kata, you're taking notes 1, 2, 3, 4, 5, 6, 7, 8, 9 that are all going to go into how to adapt and adopt that system that best fits you. So imagine what we have is a collaborative learning environment where over the course of the next 2 months, we have 50 people that all started off with the kata in the same way and then graduated to developing a system and or a strategy or some combination of those. And now we have 4 or 5 legitimate alternative rule sets that are built out to the same level of precision that the kata is, but to the level of precision that, for instance, I believe it was Dave asked me for. He says, hey, I'm expecting you to give me a system rule set that answers these particular questions. And I'm resisting the urge to do that because I see the value in giving you kata and then giving you a half a dozen ideas for exit strategies and trade management strategies, one of which, or one or more of which, is just about guaranteed to be aligned with the way that you see it. But if you start off with the grounded experience of the kata and then apply your own insights to form the system, now we have the ability to sit around the campfire and base camp and share those notes and come up with something really powerful that acknowledges the kata, but then moves beyond the kata towards systems. I personally think that what we want is a complexity of about 2, which says that 80% of the time, my simplest rule set of all is just going to be fine. It may be the one that you said, Van. I don't have any reason to discount that, and it already resonates with me, and I could live with that. But 80% of the time it's this, and 20% of the time, like if it gets past the average win or past one position sizing R, then I go to exit strategy 2, which is sniper plus manager. If you think, for those of you that have been to the systems development workshop at VTI, that's like the marble game that Van plays with 2 bags. The first bag has only a 10% win rate. But the second bag has the possibility for large follow-on moves. But you can only get to the second bag after you get through the first bag. And whatever you win on the first bag is your starting capital for the second bag. So you have to endure all the suffering of the first bag, and then that gives you a different strategy. You have to come up with a different strategy altogether because the characteristics of the trade in the second bag is considerably different than the first bag. If you take a look at our histogram on these systems, what you have is no losses greater than 1R, most of the wins being less than 2R with an average win of about 0.6, but a fat right tail. That fat right tail is the second bag. And you've got to be able to survive and generate capital in the land between -1 and +2 so that when it gets past a range stat move, you can pick that second strategy of how do I get the second, third, and fourth positions in with markets money, but then not lose my mind so that I let that thing explode my entire money-making proposition. So to review what we just said, the purpose of kata at complexity 0 is to check compliance. And then on some scale between 1 and 5, where we say 5 is a strategy and 1 is a purely mechanical system, that there's probably a couple trade-off points in here where you might have an A and a B exit strategy. And it might have, you might have an A and a B and a re-entry strategy and a second position rule here. And so on until you get to the one where it says, you know what, I'm just going to get in the water and start swimming and feel where the current takes me. And then from this pool of different trusted exit strategies or management styles, I will simply check and see what's going on that trade, then come down to my toolkit, pick the one that works, and then activate that one on the basis of reading the whole ecosystem without trying to have some kind of encyclopedia set of if-then statements and all these other complexity rules. I might treat this more as a juggler or a driver or a surfer or a wood carver or a barber or a mason. So the idea now is, to me, this is where I think we end up. This is the sweet spot for me right here. I think that where you get to after you get the kata, then you use your personal experience to come up with your primary rule for your 80% of the time. I've just noticed this thing only gets to 0.6 and then starts to fail. So what I want to do is have a system that takes that first unit of risk, and then I get to no lose plus dinner for 2 as it starts going up the stack. And then as it approaches that all important third execution risk up here, which is, so I'm up 0.2 and 0.2 and 0.2, and I took that initial 0.2 position sizing risk here. So what I'm going to do is just come up with my 80% solution, which says I'm going to use Van's example. I'm going to wait 10 bars and then go to the PSAR wherever it is. But if I could see a chance on a quick win to get to no lose plus dinner for 2, I'm going to just strike. But otherwise, I'm just going to, once I get to there, I'm just going to pick the PSAR and just take it. And then I might notice that maybe 80% of the time, my trades only do that. That's fine. Let's call that exit rule set A. You don't even get to B until it gets past 0.6. At 0.6, you might say, I'm now going to relax the PSAR, and I'm going to pick up the Bollinger Band mean. And that might be B, because you locked in an above average win. That's good. And now you've given it enough room here with the Bollinger Band mean to give it room to go. And then whatever happens, it's going to be an above average win, so hooray. And then C might be the one where I say, you know what, when I'm ready, I'll start doing the sniper plus a manager. Now, when you look at the kata, you will notice that at around rule number 8 or so, I've given you the option about how to activate the sniper, because I believe that I want to introduce that idea right away with respect, and to teach you that you only activate the sniper after you've locked in an above average win. I want to install that idea right from the get-go. So the pathway from kata to system towards strategy, really, you got to find where inside this skill set or this ecosystem is the best trade-off for you. If you want to trade more symbols, or you're on a slower time frame than I am, so you have more time to evaluate, you know what? You might just want to be here and get 50 opportunities with robotics and just accept the PSAR and just say, hey, the times that it has that big wick down, I'm not going to even worry about it. So what? And I want to get 50 opportunities of trading system number 1. That's a pretty good trade-off. I enjoy being out here and trying to find the mover so that I can exploit these periodic runaway irrational moves and get very large very fast. But you get to pick where on that continuum you want to be. It starts with the kata. And nothing in the kata, I can't forbid you from doing whatever you're going to do anyway. But what I can do is at least make the argument for why kata is important, and also why it's different than a full-up system, and then why systems are different than strategies, and then the real trade-off to it. You will notice that exactly 0% of this time was spent on discussing the entry. Well, I will take it back. There was 1 minute. We spent 1 minute talking about the entry. We spent 40 minutes talking about the ways that you develop systems and strategies and how you proceed up the learning path, and how we might use the collaborative learning environment with your accountability partners and study groups in order to come up with something really powerful. So if you think about the campfire as being the place where you come back to, back in the base camp, we graduated from the kata and then developed our system, and then we go to the campfire, check in, and then we go out into the world, and then we come back and we report our findings around the campfire. And now all of a sudden, a number of us are suggesting different rules from our experiences, and we can talk about it in that campfire. And pretty soon, this campfire starts looking like a roundabout. And then each of these excursions is that walking man, which is you. Going out, finding things, coming back, checking in, and then we start getting very proficient through the use of the roundabout and the reconnaissance. And when people find something over here that's, hey, this looks really promising, we can do a reconnaissance in force. But I'm pretty satisfied with the way the kata introduces some really important concepts that lead to good practice in how to mark up the charts in a standard way, so that we have a common frame of reference, a common professional language for people that want to learn in that way. Now, I'm not telling you got to do it this way, and you're free to mark up your charts and post them any way you want. It's just that if you want to get credit for passing the kata, then you follow those 20 steps. And then if you're the kind of person that this approach appeals to, you might look for people that have successfully accomplished the kata like you have, and now you have already figured out who aligns with you in terms of outlook, orientation, and approach to learning. So that becomes a really powerful tool for us to use to help develop our team-based approach. But there's exactly nothing wrong with electing not to use the kata. Who am I to tell you that? The point of there's room around the campfire for everybody who abides by the rules of the campfire and the roundabout in the community. That's respect for each other, pretty much. Don't be a jerk. Share what you know. Have some respect for our purpose and what we're doing, and we'll be the judge of that. So that's all I'm trying to say. So I wanted to say that about kata versus system versus rules versus strategies. Because for every rule set that I could write for an exit strategy, I can already think of 10 different personal examples where, you know what, it would be sub-optimized for this thing that happens periodically. So I'm trying to find that nice balance between a reasonable set of robust exit strategies that go into our little toolkit over here, and also provide the learning ecosystem that allows us to find ourselves on this range of complexity between 1 and 5, and then have a way to share that in a way that's useful, so that when somebody comes back and says, hey, this looks really, really promising. Like when Tony DeQuick came back and said, you know what, the frog rule sets are pretty good, but if you concentrate on these 10 symbols, it's going to be excellent. That was a major ratchet up, the discovery of frog champions, and then the connection of frog champions on swing trades and day trades. That gets us to EWW and EWZ, for example. So that was my 45-minute introduction to what we were supposed to be talking about. Alrighty, where is my little pad of brushes? Oh. So there were a couple, not trade frames or setups, but really some feedback opportunities. I think this is Leanne and Bitcoin. She tried shorting, really good exit, and stop and reverse with the SSC. So it went from a CD minus, a CD that failed, to an SSC plus that worked. And I love this strike exit right here. It's right along that fair value, and that was the resistance. If this had worked, I would have expected the next one to get to here and to here. And then I love this because that tells me she has recognized that by this time she wants to at least to get 2 once it's cleared that all-important high of the day or the hump of the dragon. So really nicely done. I would just, let's see, over here, I would point out that this is probably a collapsing dragon in here somewhere. And on that first surge down, you're not going to lose any money, because when you feel that, when it comes back and connects into here, you just realize that might just be all that there is today. So I'm going to take my risk, which was here, and drop it into here, and then pick up the Bollinger Band mean, and then probably lock that one in. So you end up getting that first piece. So that's nice. There was an opportunity here. If it got that far, my initial risk, which is here. So, see, the PSAR is always perfect. I'd get out here. Otherwise, I might get out in here. If I get the Bollinger Band mean, it's the same exit. So that's not bad. This one here, strike to the Bollinger Band mean. And then she elected to do a sniper. So that was 3 decisions that you can make. Now, maybe you can, when you graduate the kata, you will have an appreciation for why all of those different things could be good. And you can turn that into your decision tree that works for you. And share that, and we'll find a way to help you write it even cleaner, encode it, and turn it into a robot, and then just follow it up in that way. So really nice work from Leanne on that one. What I discovered is that the pen in using 3D Paint it's so much better than using that primitive markup that it's worth pasting these things in and doing it this way. All right, let's see what we got here. XLP, beautiful Z3 pinch breakdown. He gets to no lose plus dinner for 2 right here. I like that one because on this, you see how that breaks down, and then the PSAR flips. Like he was sweating it here as the PSAR was rising, but here it flipped, and so then he jumps and locks it in. Perfect. And then you can just follow the PSAR all the way down. Bingo. And then a nice SSC here. And this is the case where the PSAR gives you a worse exit than if you just waited for the next PSAR flip here and then pick up the Bollinger Band mean or the PSAR and you get this. So I still love that. Nice write up. The second position, I think, yeah, certainly here. I might have wanted to get a second position here, like when this PSAR dot broke. That's probably a good second position. And then this comes down, rolls up, and then fails. That makes this a good third position here. And then I would probably be exiting here because it got beyond Z3 and then reversed. But really nicely done. That's a shock on his first short. So that ain't bad. This is one of those, again, where you just notice how tightly compressed everything is in here on the screen. And you'll find it easier to manage if you eliminate all this kind of space up in here and some of this space down in here. And then if you can turn this MACD histogram space into just the dots like Luke has done, because what you're doing is you're only using half the, you only got about half the vertical territory here to manage the trades. Still, okay, so this is nice. Good strike exit, love it. And you can see the value add of the maximum favorable excursion and then what you're able to lock in. So that's pretty good. I like this one. After 8 or 9 bars, yeah, that's still good. That's good. And this one, Trying to see where that. Oh, it was one long candle. Maybe gets out in here. So not bad. That's just what it was like. Here was the next opportunity, and this one I think paid off. And now this is why we want resilience, one of those qualities of the HRO. It was probably -1 from the three previous trades, and here's another loss, so that's minus 1.7 out of 4 trades, and then the 5th trade pays for all. And this is where that next one makes that twice as good, and then this is a very good exit. When you see that kind of a move, and then you got this double bottom in here, that's the time I really like this. I really like that one, because that power of that double bottom, it gives you sort of like, here's leg one, pulled back, and instead of them voting down to get another leg like this, the buyers came right back in and kept pushing it. And so getting the entry here postures you so that if it breaks out above that Z3 pinch, see how the Z3 has come down a pinch? So now if you're here and it breaks out here, that thing's going to go up and connect to here, and then to here, and then to the top of this one to here, and then the Z3 excursion up to here. So by that time, you've got 2 positions in, a 3rd position in, and then this thing is running away, and there's your whale. Because if this support level violates, and you had 3 positions in with market's money in hand, man, that's going to run like a scalded ape. So nicely done. Here's another nice one. Doesn't work. Stop and reverse. This is one where, especially here, I think your exit is better there. And that doesn't feel like much, but when you go up and look at the size of the execution risk, that's how much we gave back. This may have been an opportunity for a second position, and then a nice tight stop. And if you had a second position in here, and then it gave you'd be exiting there, because you don't want that one to become a scratch. You would rather have that one at least lock in that much, and that would really turn a 1.37 probably into a 2.5. Not much to see on this one, and when it doesn't do anything, there's nothing to do. But again, just notice how much unused chart space there is. Oops. All right, so now we're getting into the trade frames. Genuinely the real reason we're here. This is good practice. There's a 30-minute and a daily, so you get the operational level and the tactical level. and then you could get a real sense for it feels really tightly compressed over here, but then when you look at the, those green lines and how that interprets on that one, you see, okay, got it. And now you can see why that low of the day, that 29.39, is such an important level. So if it opens inside here and then starts failing through, you want to be short when it breaks that PSAR, so that when it falls through here, you can see there's no support in here at all. That the next support level is going to be down around here, or maybe even a Z2. And so that move to here will be fast. So this little front run gives you a nice posture. I like both of those levels here. I would say if I take a look at this price space in here, that's the result of this gap. When this downward pressure reversed, and here's the PSAR flip, this was the gap. So if it ever gets to there, it's going to fly through that. This is the beginning of the congestion zone caused by those. So by this time, if this fails and I can get 2 positions in, and it starts to recover, because the last time it was here, guys bought it and they sent it all the way up. So I'm not going to stick her. If I get 2 positions in and it starts to reverse at a key price level of 28, dude, make bank and then stop and reverse. But if it fails, I'd like to have a 3rd position. Now it's at the Bollinger Band mean, and if it breaks below here, I could have 3 positions in. That move from there to there will be fast. And then the next support level is all the way down here. So you could conceivably have 4 positions short at 25, paid for with markets money, starting with money that you made inside here. And because this is Brazil, notice how big those daily moves can be on a percentage basis. So you can actually make some money in there to fund those overnight swings. So that's a nice trade frame. And then on the way up, you can, we have to get through the, region of the dragon. But if it were to get above 31.5, then you can see the last time it really rocketed high to get up to 33. So those two price levels there give us an opportunity to exploit an upward move. So that looks like a nice, that looks just like mine. Simon Property Group, even easier to see. You can already see on the daily just how horrible that sell-off from about 95 down to 67 is. That's a loss of $30 on 90. That's minus 30%. Ugh. And then you can feel that if it breaks through that Bollinger Band mean, that here and then here are the next 2 targets. So there's not much resistance inside here. Yeah, so once you get short on that one, it's going to go. It's already below that key support level that was here and here, and it's already rocking its way down there. So instantly short, and then a second position here. Now, if it got to here and started to reverse, cash, and just enjoy that little run. But in terms of a combination of a swing and an intraday turbo, man, that's tasty. Wheaton Precious Metals, gotta love this guy. So Wheaton, I think, was responding to that. Friday was a big sell-off in the equities. There was a lack of confidence. And Wheaton, more than any other defensive play, really had that nice big 1-day pop. So it had 10 days in a row of just mucking around in here. And then it gave the PSAR flip, and off she went. And that's the argument for when the truth changes, it changes fast. And now a hybrid frog box, and off he goes. And a strike exit here. You enjoy that entire run and bank. And you might keep a piece for your swing. But even if you don't see that until today, you can see that all it has to do is get above this level here, and really above 42, and that's what we're showing here. Then off it goes. I would invite you to look at some support levels here. Where else do I see one? Maybe this. Where that PSAR flip occurred. Like at 44 feels important. So does this one. And so does that PSAR flip up there. So I think I would want to have, let's see, where do I want to get a second position on this one? I think somewhere just this side of 44. If I could get a second position in and it goes, then I would try to do that and then get my stop. I would try to get my stop, from here, and then lock that in really tight. And if I could have two in to test that one, and then this one and this one, I'd be pretty happy with that. But you'll notice that when this thing is working, it has a nice grind, but when it fails fast and hard. So that's why I'm not really interested in trying to get 4 positions into this one. But if I could get 2 in pretty quick, like one here and one there, then I would just let it go and see how far it can go. Because I just believe that if the conditions were set such that Wheaton was going to get that far that fast, that there would be an intervention in the equities to lock that, to prevent further panic selling. So I'm worried about that kind of tactical response. Wells Fargo's up next. So we saw the financial sectors were in somewhat of distress, so Wells Fargo is kind of tuned into that logic. Nice. It's had a 50% pullback. So from this move, it's made a nice run up. A little thicker line there. From this SSC, it's had a nice run. It's had almost a 2/3 pullback. And I like the fact that you are respecting that, so you get significant. You could end up getting 3 shots short there fast. So now you're using, this is nice, the collapsing dragon and the PSAR collapse, then this collapsing dragon, and then the final one. So if you could have 3 positions short, bang, 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 those little tripwires, that would really be amazing. And then those collapse all the way down here, and then your target is 24, and that would be a big win. That's nice. On the upside, this was not very convincing. It had a nice big gap up and ran up and then just collapsed. So that's the least likely event to me. But you've got a chance here to get 1, 2, and 3 positions in. This one gets in because it takes out that PSAR. I don't disagree with that. It gets nice and clear of all this sideways quiet channel crap. And it's out here. I might actually go a little earlier, like here at 28, and because that's the Z3 excursion line already. I might tighten that up a little bit. I like this one, and you might as well get that one there. So yeah, with those 3, I'd be happy. I would just bring this one down a little bit because I think 28 is enough clearance. Like if you take the width or the height of this support level here and just added another one of those, it would get you to entry at 28. So that's a 1% improvement. So I would take that one. All right, so these are Joe's. So the entire metal sector, I hit that pretty hard yesterday on the potential weaknesses in there. So we're exploiting that right now. Now the way he's showing this, he's only showing it on to the downside, and there's the 200-day target up there. There's a lot of resistance. It has to overcome this resistance, maybe the baby dragon, the RL10, in the previous peak. That's hard. That's a harder sell. And then that breakdown gives you Bollinger Band mean, fair value, Z-1, Z-2. I like that. I think this gives you enough time to get a second position in here. So you're on one position getting short. That feels reasonable. You'll be able to get a pretty nice position size on that one. Alcoa is nice as a hybrid frog too. So this is one where turbo plus core is a nice way to get it started, because you can see there are some days where right from the open, you'll get a really powerful move. And this one is postured to have a great big fail. So I like that one. I would just ask yourself, what do you do if, against my advice or against my assessment, hey, what if the S&P is good, and what if XLB is double good? What is your target in that sector to do well? So we have a choice between Alcoa, Nucor, U.S. Steel, and Cliff, and then XLB itself. Come up with a contingency plan for what to do if all of that just starts working. So don't be surprised by it. And you might have a plan which says, well, I'm just not going to do anything with it. That's still a plan. But think your way through that. Caterpillar is essentially the same. It's got a 4-day low. It has more room to fail, I think, than Alcoa did. So we've identified, let's see, Bollinger Band mean, RL90, Z1, the PSAR flip and the belly of the dragon over here. And then big fail through there. I mean, that would be almost a 20% fail if that were to fail. So this gives you a chance to have a really large position if this whole sector and that company collapse. There's an argument for it. I mean, where's the economic activity that needs Caterpillar's sources? I don't know. So I like that one. Again, same issue. I would lump this one in with XLB and maybe XLI. What do you do if the market's up strong? I think that's a tactical play for me. DIA, same posture, and it's not quite as good as CAT was, so it's closer to that, to me, that key turning point at the right in here at the combination of the Bollinger Band mean and the fair value. This is a nice tight cluster at Z minus 1. And from 258 to 242 is 16 bucks on 250. So that's about 8%, I guess. Yeah. That's vulnerable. This is one, though, that I think if you just wanted a way to play the upside in the lesser likely case of a market improvement, then this is instead of trying to pick individual companies, this is one where looking at the shorter term, say, hey, if this thing were opened here and then started going up, I would want to try to play. That's a 3% move, and intraday that has some possibilities, because remember, that's $10 is 1,000 pennies is 5,000 bucks on one contract in YM, and that's just in this tactical zone inside the dragon's body. That's not even, it could just do that on the basis of noise, you know. And then the last time it was down here, it did that. This failure to follow through to the upside, well, actually from here, it actually did give you that one-day move up into here. So that 3% represents that much in YM. So something to think about purely on the tactical side. What you're showing is daily swing trades, but that would be an example of turbo plus core being set up in the broad market. Joe, you keep marking up all my charts and you're going to become my friend. My trusted friend. Look at you saving me all this work. Boy, do I like this little logic that he's got here. 1, 2, 3, 4 units of risk. But again, notice you had this one and then an uptick and it closed well. This is one where I just say, look, I'm shooting for this. I'd be ready to trade that one in both directions. But because it's Mexico, I'm just always going to start that off with the hybrid frog no matter what, turbo. And then if it's going well, then I will keep 10% and turn that into a core swing position. And then my upside targets are here. And I want to have 2 positions in by the time it takes out this price level. So I have between that line, I won't, I plan to be long on a swing on this one if it gets above that green line. But otherwise, I love that downward motion. That's relatively easy to see because the price level that it's at right now has already negated all of this price action. And then this was a gap up. So if it gets through here, it's going to come down into this cluster very quickly. So the way you're postured here is you'll have almost 2R in hand. So somewhere around in here, around 30 bucks even, is where I want to have my second swing position in, because I think the run, it will get down to 28 even pretty fast. So I like that one. I'm more optimistic on the upside for Mexico than you are. I will get back to that, Robert. I just saw your question. Robert asked me if there was a SSC on the daily on Wheaton. I think there is, if memory. This is basically the same setup as Mexico, so I'm going to say the same things. But I just want you to notice that the 2-day performance here was not as good as Mexico's. But I'm ready to try that here, and certainly by here. If it gets above 3150, I have to be long. So I will try to I'm going to try to read the leaves and see how things are going inside here. But that's going to be a hybrid frog turbo, and then if it works well, into a core. And again, if it gets above this, I'd actually like to have 3 positions in by then. Oh, here's Wheaton. Thank you. Joe is anticipating all our needs. Exactly correct, Robert. This is a SSC. Let's see, get my brushes. So let's check our sight picture. Harsh winter, yes. Winter has become spring, yes. PSAR has flipped, yes. So technically, if you're following the rules, you're long already at 40, and you've already locked in $2. You've locked in a 5% move already. This would then be the second position because it's crossing the Bollinger Band mean. This one adds at that PSAR in the RL90. That's fine. Third position here at the hump of the dragon. I like it. And then the all-time peak. Yeah, this one is the RL10 hump is so close that I might go ahead and put a third position in here at 46 and respect that one, and then a fourth position here because then that's off and running. Because if that happens, that means the rest of the equities are getting crushed. So then your choice is, if the equities are getting crushed, do you want to play Wheaton as an alternative asset class or just play S-Dow, which is the triple inverse Dow? So that's a tactical choice. I would probably go with the S-Dow. Venerable U.S. Steel. Look how much screen territory I can harvest by having the RL10 colored correctly. I don't even have to see that. I can take that off the chart, or I can take it off the screen altogether. Can't I? Yes, I can. So let's see. Brushes. Yeah, now see, I would love this one because unlike Brazil and Mexico, this thing is already in full fail mode. Those last 2 days. Curses. Come on now. It's not letting me draw, so we're going to try something new. Yeah, but this one looks good. I would also be ready though. U.S. Steel. I would be ready on the upside of this one. Again, that goes back to the contingency plan that I mentioned before. I think we got to have a plan for that. let's see, brushes. All right, so we have treasuries on the daily. You know, this really doesn't look like the risk-free rate of return much, does it? So when you see all of that gappy activity, that's why I didn't, when I made my strategic shift, I didn't put everything in treasuries because it trades more like a stock. But you can see it's coming into a turning point here. In this move up, it pulled away from the baby dragon a bit, but now it's coming like into a little pinch, if you will. So this is equally likely to go in either direction. I think it's up. I think I would want to be adding right about here. A second, so I like the entry long here. I think my second position I'd want to have 2 quick. And then there's this hump it's got to get through, which is about that one, which is also at Z1. So I'd like to have 2 in hand. And then if it starts rolling over tactically, then I'll make bank. But then if it breaks through, then there's like a little gap in here. So it would get to 166 and a quarter pretty fast. Target here. Yeah, I want you to start adding. I like the way you've added this as a target in here. Start looking for those kind of those consolidation regions in here. Those little humps of the dragon become important price levels. This little turning point here, where it tested, that's where it's fought its way back to. So you see here, it went up, pulled down, came into the station, and collapsed. Now it's fought. It's all the way back up here. It's come into the station, and what's it going to do? So it's in a perfect critical state. From here, either big strong move and the market's getting crushed, or there's some people buying the indexes, and then this starts to flatten out. So that's a reasonable risk. You're not going to get smashed on that on a swing trade. You know, your second unit of risk would be down here. Here. And rather than playing treasury short, I would rather be long the indexes, and I'd be looking at, again, UDOW or even the triple leveraged NASDAQ or XLK, something like that. Yeah, that looks good. A couple more. Hang in there. Oh, it's another one on treasuries. I'm sorry. Oh, this was this is on the 30-minute. Not much more to see there, except that really, if it gets above, if it gets above this this little hump right here, again, it's ready to go. There's no resistance till it gets to there. So you want to get that one fast, and then this one becomes a solid resistance. So I would just play this one. Let me see it get all the way through here before I put the second position in here. I think that's about where, probably 163.75. I wouldn't put the second position in until I got to there. Just play this much on one. But you want to get that in fast. When it as soon as it breaks above this. Yeah. Then again, if you want to be, if you're a treasury trader and you're trading the futures, then I think probably right there. And then the second position, if that breaks, yeah. Nucor, it's in better shape than U.S. Steel was, that's for sure. That little bit of recovery was then, they put the lie to it in that last 30 minutes where it kind of collapsed down here. But you don't have to pay much to find out if you're wrong. You know, that's kind of your risk box right there. So you want to have positions in right there. But otherwise, if it breaks out above this, sure, it's going to go to 44 and a quarter. So that's $1.25, and you're risking 25 cents. So that's 5 to 1. Yeah, nothing wrong with that one. And then you're watching this price level for sure, and then the hump of the dragon. I like that. Yeah, I think you could put a second position on here, and then a third position there. Nucor Steel. Yeah. Once it starts going, it gets some buying pressure. You know, it has that's about 5 or 6 hours, or 4 or 5 hours. It can have some nice moves, and it hasn't exhausted that yet. So we're Nucor definitely in play. I think this is the last chart that was up. And this one was some technical trading. Oh yeah, I think we already saw that one. Yeah, and again, I would just say this is a matter of scale. Again, when you're trying to manage these things and making your relative judgments, it just seems to me that I think you want to turn the MACD into signal so that this gets compressed, and then a lot of unused real estate makes this entire range of management in here. I mean, you're only using a third of your screen territory there, and that makes it harder to feel and see. Yeah, okay. That's everything I wanted to cover. I'll get this published and posted. Last chance for questions there. Hopefully that opening segment on kata versus systems versus strategies and the idea of the roundabout resonates with you. Still working on that narrative. Okay. Well, thanks so much, guys. Good work. Have a happy Father's Day. We had some Kansas City barbecue that could not be beat. Ribs and chicken and sausage, and broke down on the carbs and had some of the good cornbread with coffee. Oh, Santa Maria. Is that good? Take good care, guys. We'll see you in the chat room.